All right. Good morning, everybody. Since we had a little audio issue last week, I do want to confirm if somebody could type in the chat that you can hear me and that the audio is working well before I start speaking for 20 minutes before I realize we don't have any audio. So if you guys could do that, that would be awesome. Happy Hump Day. My wife yelled Hump Day in the background if you didn't hear. But I do need to confirm that you can hear. So if somebody will just type yes in the chat, or we can hear you, or all good, anything like that, we can get started. Thank you, George. Welcome to the stream. Appreciate it. Okay. Um, Today we are going to go over IWJ Pivot Point Pro. If you're new here, you haven't been here before, it is our indicator that we use for day and swing trading. And over the last 20 months, it has, since its inception, it was 20 months ago that we started it, it has been absolutely crushing. It's a net 66,000 on a 100K account for a 66% return on investment, which is an outstanding return, something you just can't find. And all you have to do is simply follow the rules. It's a very simple indicator. You can see on the screen it gives you buys and sells. And we don't, this blue and yellow here. So the blue is pre-market, or post-market, excuse me. The yellow is pre-market. We have this turned on because it helps the indicator perform properly. However, we don't trade any of this. We don't do any after-hours trading because there's no volume and there's no reason to. It is it's just not a profitable thing to do, so we don't do that. But you can see though that it gives you the buys and the sells. It gives you sell stops and long stops, which is buy stop. So short stop and long stop is what the SS and LS stand for. And so it gives you buys and sells. It gives you stops. Last 2 days we really haven't had much to do because one day went straight up on Monday and yesterday chopped and then went straight down. So both were trend days, and we just don't trade those because they're not conducive to how the indicator works. If you want to get the indicator, you can go over to Invest with Jacob. Nope, not the admin page though. You can go over to Invest with Jacob here, and once it comes up, once my internet gets rolling here, there we go. You can go to our membership plans. And then if you scroll down, you'll see our monthly rooms, which you can get in. You get all of our trades in there. It does not come with the indicator, but you get a lot of good stuff in there. You get the live calls if you want that. Those come with the monthly rooms, but if you just want to try one out. And down here you see the Trading View indicators. It's $59 a month with a 30-day money-back guarantee and $5.90 for the year. 2 months for free there. 30-day money-back guarantee on that. And that is something I stand behind because I want you guys to be happy. I want you to get a quality product. I don't want you to think that I'm just throwing this at you and that's it. I want you to know that if it doesn't work out for you or it's not your type of trading or something is wrong, you get a 30-day trial and then you can just, cancel it at any time. We give full training, so once you do get the indicator, you'll get to this page where you'll give me your TradingView username, and this is a TradingView only indicator. So you can only use it if you have TradingView. Now, if you don't have a TradingView account, that's okay. I have a link right here once you get the indicator. So don't get a TradingView account yet. I have a link right here, and you can click that and get a new TradingView account, and you get a discount on it. I think it's 20%, and full disclosure, I do get a kickback from TradingView, but I only recommend things that I love, and we both win. You get a discount, I get a kickback, and it's a great product. So it tells you how to set up TradingView, how to set up the indicator, the day trading strategy that we use exactly how we use the indicator step by step, our trend day strategy, so how we trade trend days like the last 2 days, and our weekly swing strategy. So you can see all of that. You get training, you get all of the rules, everything we use the indicator for, you get. And you also, if you get in my rooms, have me to give you what the trades look like, why they are, kind of like we do here, where I kind of walk through the trades while we're trading here, and you get that in my rooms as well if you sign up for the room. So that's the indicator. It's super simple to use. It's buy, you buy, sell, you sell. We only trade until 10 a.m. Pacific time, 1 p.m. Eastern. That is about midday, and that is about when the volume dries up in the market and there's typically not a lot of movement to trade, and it gets a little choppier. So we try to trade the first moves of the day because there's big moves that happen early in the day before the volume dries up. You get big volume at the open first couple hours of the day, and then big volume near the close. And in the middle, it's kind of medium to low volume. And you want to kind of avoid those hours of trading because you need volume in general to move the market, and the indicator is built off of understanding high volume levels and how to trade off of them. Morning, Siva. Welcome to the stream. Morning, Cash. Welcome to the stream. Yeah, I can do a big picture. Give me a minute. What else? Overall, yeah, we can do this. Let's do that now. We'll do the counts right now and go through. So in my room, I've been talking about the fact that we're looking for this diagonal to end, this fifth wave up. It's not the greatest structure ever, but it is a valid diagonal structure. We do have our high right off the 1382 over here. So they came up to the red line, which is 67.5825. That's our 1382 extension, which is a very common wave 5 extension. They've pulled back toward the 8 on the daily chart. So this red line is the 8 exponential moving average. That is a momentum indicator. If you just go back and watch, you can see that they stay above it. They test it, stay above it, test it. If they get below it, they're likely to test the 21. So they came down and test the 21 moving average, got back above the 8, stay above it, test it, back above it. So as long as they're above the red line, momentum is up. Now when the market turns over and they pull back and the red line crosses the blue line, then momentum is down and they got to get back through it to the upside. So it's just the same thing. Inverse, the red line would be below the blue line and we'd be in a downtrend. Now I know that downtrend is a foreign concept to the market recently, but they will happen, and this market is very stretched and overbought right now, and we are entering the worst period of market seasonality. So we are looking for a pullback here, whether that pullback is a substantial pullback that breaks several support levels, or it is a minor pullback that needs to come back to, say, 63 and then back up. That's going to be determined. I told my group yesterday, I kind of feel like there's still one more high left in this market after a pullback. But we'll have to see what happens when they get down here to the August lows, and if they break those, ultimately the April lows. So if we zoom out for a quick big picture update, I don't do them very often because, quite frankly, big picture doesn't change very much, and it hasn't changed. We are still in the fifth wave here of a major supercycle 3. So this is the monthly chart up until now, and you'll see the stuff come on here in just a second. As soon as everything loads up. So in the big picture, we are, the top of the roaring 20s was wave 1. The Great Depression was wave 2. We are trying to finish wave 3 now, and we are at that trend line. We are at that trend line. We are at that area back in 2022 or 21. I can't remember. I projected us to 6,500. Now we've gotten to 6,700, so we've gone a little past that. And markets can overextend, especially when you get a major wave 3 ending. You can tend to get a blow off top. And then when that happens, and these things take a long time to play out. If you watched my video yesterday, I talked about this with the Big Short. Michael Burry made a huge multi-million-dollar gamble that the housing market was going to crash, and he was ultimately right, and he ultimately made a ton of money. However, his patience was tested. He was under a ton of pressure because when he made all of those companies give him securities to trade against the quote-unquote prime home loans that were out there, it took almost 2 years before that came to fruition, and the market kept ripping higher. And everybody's like, see, this is a bull market. I don't know why anybody trade against homes. They are the most secure thing in history, blah, blah, blah. It's never whatever. Just because there are cracks in the economy, because there are problems under the hood, doesn't mean they're going to happen today or tomorrow or even this year. Like I said, it took 2 years, and we're talking about a short-term housing crisis, for that to play out. And if and when we hit that super cycle 3 top, I do expect a very, very large correction. And I expect it to come back into this 1500 area on the SPX. That is the last place we broke out of and have not back tested. It's also basically where wave 5 kind of began. I mean, wave 5 truly began down here at the bottom of wave 4. But in essence, we are just looking for support to break, and that support is right here at these April lows, and breaking below that, up here at the April lows. Breaking below that takes us down to the 22 lows, which will be in the 3700 area. And then once they get there, you likely see a bounce, and then down into the 1600 area overall. And I do expect that to take over a decade. The reason you expect it to take over a decade, that's not just a guess or a made up thing. It's that when you see, for instance, this wave 2 was from March 37 to, so this wave 2 was 5 years, right? And it was that's very quick in the overall time frame of this move, 5 years. So wave 4, the theory of alternation tells us wave 4 should be wider and longer, right? So we get up to wave 4, and wave 4 takes 10 years, well, 9 years, 2000 to 2009, double the time frame of this wave 2, right? So when you look at what happened with the Great Depression, that was from October 29 to April of 32. So wave 2 was straight down in only 3 years. So there are two things to consider. Number one, wave 2 of that degree was very fast, right? So wave 4 of that degree, which is what we're looking for, should be very slow and wide. Number 2, this correction right here took 9 years, and it's a degree smaller than this correction. And typically the bigger corrections take longer. So this was a decade. So I'm expecting 15, minimum 20, possible, but longer than this correction took. And quite a haircut off of the market. Now, before you tell me I'm crazy and the markets can't do that, I would encourage you to go look at Intel, Bitcoin. I can name a whole bunch of others, or show you a whole bunch of others that have skyrocketed and then given up 3/4 of their value. And lots of them were considered very valuable or stable, Intel being one of those. You see it all the time. I mean, just recently, who was it? Was it AMD? AMD gave up a ton of its value in no time. Where was that at? Yeah, AMD in 05 went from 43 to in 16, so it's an 11-year correction down to 2. And now they're back up at 160. So we got to remember that they gave up almost 100% of their value in just a few years. And that we're in an economic bubble of many levels. Where we at? We got 15 minutes. Okay. If you are, excuse me, let me get this back where it goes so I don't. If you watched my video yesterday, I talked about Tricolor bankrupting. Tricolor is one of the biggest auto lenders in the world. That was $2 billion in loans that that are defaulted. 200 million of that is on JP Morgan's balance sheet. Another several million BlackRock bought up dollar for dollar, meaning if the loan was $11,000, they paid $11,000 for it, and now those loans are valued at 12 cents on the dollar, so they've lost 88% of what they invested. and that's going to be a big hit on those balance sheets. And that's just the first domino to fall. That's the small one. You've got consumer credit card debt that's at the highest level it's ever been. You have commercial mortgages are defaulting at the highest rate in history. Those are all on balance sheets of banks. And while we're in an AI bubble, the banks are going to lead the money issues, which will cause the AI bubble to pop. So you have a commercial real estate bubble, you have a debt bubble, you have a car loan bubble, you have an AI bubble. I believe you will have a housing issue after that. And all of that will lead to a lot of pain in the stock market. And I also explained that, when I say news is noise, that's because it doesn't matter in the moment. For instance, in 2020, when we bottomed, COVID was at the highest levels ever. We were in shutdowns across the country. The Las Vegas Strip was closed for the first time in history. Unemployment was skyrocketing. Debt was skyrocketing. We were writing trillions of dollars in checks to cover people's expenses. And the market went on the most historical rally in history into all of that economic data. That's because it didn't matter yet. Then in 2022, inflation from 2020 started to rear its ugly head. So when you see the headline that says, wow, 1 million people died from COVID, the market doesn't care because nothing's affecting the market yet. Inflation isn't here yet. So they plow forward while everybody else is doom and gloom. They make a ton of money, move it up, and then when inflation hits and everybody's bought onto the bandwagon of it's never going down, they crash the market. And I think we're getting close to those kind of euphoric levels again. You also have leverage in the public sector at all-time highs and skyrocketing. It's not like just barely at an all-time high. It is skyrocketing. So the public sector is over-leveraged in the market, the heaviest they've ever been. And leverage is also what causes crashes because you get margin calls. You get people scrambling to get out of positions. They have to sell quickly. It's a very big problem. So not preaching doom and gloom. I am preaching what I think will happen. I hope I'm wrong. I hope it doesn't happen. I think it's going to be a bad time for America because when you throw in the social climate on top of that, when you have people starting to have money problems on top of having interpersonal problems, anger really jumps out. So that's the big picture view. Any chance to increase your volume? I can barely hear because I'm in a noisy environment. I can try. I have it pretty high already. Yeah, I've got it on max on my microphone. I know it doesn't amplify a ton, but that's what it's designed to do. So I'm not sure. I have it as high as I can get it for now. Sorry. Is there a real possibility for it to drop that low considering all the money printing and devaluation of the dollar? Oh, yeah, that's a big problem, too. The dollar's a huge problem. The devaluation of the dollar will cause issues for America. Powell just spoke yesterday, and he's got a problem, and he knows it. If he cuts rates too fast, then inflation comes back, and inflation stays a problem and continues to be a problem. If he cuts rates too slow, employment skyrockets, and that's a problem. So he's kind of has this, we have to be exactly perfect deal on that, and I don't think it's ever going to be that. And because of that, I think we're headed towards stagflation, which is one of the worst things for the economy there is. We have high inflation, no employment, and or high unemployment, and nobody wants to invest in anything at that time. So I think there are plenty of problems in the market that are more important than just the dollar. All right, we got about 20 minutes. I didn't go over NQ. I'll do it real quick. By the way, if you're in my rooms or you're not in my rooms, you missed out on the gold move we got in over a year ago in April 2024, and I've absolutely killed that. We took a little bit off the table yesterday. It's hitting some targets we were looking for. So those are the types of things we do in my room as well. This NQ. So the NQ, same thing. We're in that fifth wave higher. Trying to complete, whether it's 5 of 5 or 5 of 3 is to be determined. Meaning, do we have another pullback high? Like, do they have a move like this? Or, you know, is it 5 of 5 and we're doing something like that? That's all to be determined. And that's the big thing. Everybody wants Elliott Wave to be perfect and like static. And that's just not how it works. You use the chart that you're given, the information that you're given at the time, and you make a setup call. So you set up what you're going to expect, and if the market is able to fulfill those things, that's what you would expect. However, when it fails, then you adjust and you make another run at it with another chart or another setup, another structure, another, you know, formation, whatever it is, and understand where to change. And then we don't change our view until or unless there's a reason to. And what I mean by that is this is a bull market. And I know that's an obvious statement, but it's a bull market until it breaks support. And until it breaks support, we can push higher. We can make higher highs, and the counts can be adjusted. There's no definitive, this is definitely how it's going. It is this is where we think we're at. This is how it looks. And very often when you get the setup and you get the start of the follow through, so for instance, you get a 1, 2, 1, 2, and then they break above this high. Very often that hits the targets and plays out exactly how you would expect. So it's a very beneficial thing for understanding bigger term targets. Like I said back in 2022, I said 6,500 or maybe 6,300. I can't remember. That's 2 years ago. And here we are above that. We've extended a little further than we expected, but that was back when we were in the 3,000s. In the 3,000s, I said, and my 401k reflects it. You know, and then once we got up to that 6,000 area, I had everybody in my group. Gold was in a setup to go ballistic. And I said, hey, we need to move to gold. We moved to gold last April. It's up over 100% in the last year. So actually like 160%. We're getting ready to triple our money in a year and a half. So this is where Elliott Wave's super powerful in understanding where breakouts are going to occur and what those targets are and how to take advantage of them. Does it have its moments that it sucks? Yeah. And it like micro counts are really hard. Diagonals are really hard. This has been since 2022, which broke into wave one territory and then went back and make a high. That makes everything a giant diagonal. Well, giant diagonals suck because they're choppy and it's hard to navigate them. So it's going to be much harder to be correct on your counts because diagonals go all over the place. They're all 3-wave counts. Everything looks the same and it's much more difficult. So when people criticize Elliott Wave for either having a direction, account for both directions, or constantly changing, they aren't understanding that the market is constantly changing. So you must adapt to what the market is showing you. And you can only trade setups. That's the only thing you can do. And all the indicator does is give you good setups or give you trades that are good setups. And then it's up to you to manage those trades properly. And if you do that, you have an edge on the market. And if you apply an edge relentlessly to the market, you will make money, as we have proven over the last 20 months. Is it possible during one of our 1 p.m. calls you could do a large view like you just showed, but for gold, for future IRAs long-term who have missed your earlier metals trade? Yeah, we can do that. I think gold likely has one more high, maybe two, but I would look for gold wherever it decides to kind of top out to give a pretty strong pullback, one more push, and then turn down after that. But yeah, just remind me on the 1 o'clock call and I'll do it. And welcome to the stream, Brad. Welcome to the stream, Zam Zam. Guys, you are getting 30% off of your first month of the indicator if you want to try it out. And you do get that 30-day money-back guarantee. So both of those things are very helpful in allowing you to get in at a cheap price as well as try it out for no risk. So make sure you check it out. I think you'll really like it. So far, after yesterday's push down today, we got a little small bounce. They came back up into resistance. This 664 area is going to be some resistance. That's the high of the day, or pre-market high, I should say. We do have a one-day max up at 669 and change, and a one-day min down at 657 and change. So they have some room in both directions. We are kind of in the middle of that. That's kind of how they like to do it. Unless they're going to do a reversal. Sometimes they'll open down near the one-day min and then launch it, and vice versa. They'll open up near the one-day max and drop it. So we do have some key levels today: 668, 666, 6700 SPX is a huge call wall. It's going to be very difficult to get through, and if they do, you should likely see a squeeze then as well. So until we see a solid rejection of 6700 to kind of tell us a bigger pullback or a more drawn out pullback is going to take place, the bulls are still in control. All right, we got a few minutes to the open here, so I am going to get ready for our trade. And let's see here. As of right now, we are still in NASDAQ. NASDAQ is in and out of a sell cycle right now, and ES is in a weakening sell cycle. It's kind of hard to explain. It was in a sell cycle, and now it's gotten a buy a signal, obviously, here, and it's working on that. It's not going to get another buy because of the NASDAQ, but it's working on this buy from the pre-market here. So we are likely, unless they shoot it down immediately, we're likely to have our first trade be a put. But that, again, if they turn down immediately, then it could be a buy. So it's kind of in between right now. We don't have a clear-cut action at the open, and I actually don't mind that because it's less likely to be a trend day when those things happen. What I mean by that is if the market's not in conjunction and pushing in the same direction, then they're not in sync. And they weren't in sync early yesterday, and it did turn into a trend day. But more often than not, when they're not in sync, it's going to chop, which is good for trading. We do have to be careful here. They are at the pre-market high. And as you know, for a trend day, if they get above the pre-market high or low, so if they break above this, backtest VWAP in the 21 and hold and make a new high, then you're very likely in a trend day higher. So we'll keep an eye on those parameters. We'll see what the ADD and VOLD look like here at the open. All right, 8 seconds. Let's see what we get. All right, they push down through a VWAP, the 21 and the 8 on this first bar. I would expect them to do what they're doing right this second, which is kind of back up and maybe close at VWAP and the 21 and the 8. If they just push right through it, that's a pretty solid move for the bears to drive right through that at the open, because generally there's going to be some support at that level. Right now the ADD is 271 positive and climbing a little, and the VOLD is slightly positive as well. Overall internals are what I would call mildly positive. NQ looks like it's trying to dive here at the open. So if we go look at NQ real quick, it looks like it's already testing its lows. Not quite its lows. Its lows down here at 24,810, but it's definitely breaking down toward them in a pretty quick way. So keep an eye on NQ to lead the way. Remember yesterday NQ was the leader as well. So we do want to see, we do want to follow NQ's lead on these types of situations. Looking for a gap close here at 24,831.50, and then a possible bounce there, or the gap close on the ES as well. And SPY is about 94 cents down. So we'll see how it goes here. Just close the gap on this NQ. ES still has a ways to go for its gap close, so we could see NQ push through a little bit while ES catches up, or NQ may consolidate while ES catches up. But we do have the gap close on the ES now. Or I'm sorry, on the NQ. They did close below VWAP, the 21 and the 8 there. They did back off of the low a little bit, but solid close for the bears. They now should look for follow through here coming off the pre-market high. If they make another low here, I would expect them to hit 663, which is the pre-market low. That will be an area I expect to bounce. You can see in the pre-morning set or pre-market session, they hit that level exactly, and right at the close yesterday, they hit that 663 level, and it's a high volume level as well. So I would expect that to be a little bit of a bounce. Now, whether that takes us up and past the pre-market high or continues down, that's to be determined. But that is what I would expect off of 663. That would be my preferred place to get, say, a buy signal. If you are a bear, you would really like to see him break 6,700 on the ES. That was support yesterday. That's been big support for a while. 6,700 would be, I wouldn't say a damn opening, but it would be acceleration to 6680, 6660 after that. Yes, trying to make a new low here, or SPY rather, and there it is. So I would expect them to hit that 663 zone now. This is essentially a failed breakout at the open. And so when you get a failed breakout, you should expect them to come down to the pre-market low. If you get a failed breakdown, you should expect them to come back up to the pre-market high. Always remember that. The ADD is climbing. It's up to 500, and Vold is green. So, and RTY, where's RTY? RTY slightly green. So I'd be a little concerned of bounce here or chop for the rest of the day. Maybe not a breakdown. So keep in mind that's a possibility. SPY's looking for the gap close here. I would like to see him spike the gap close into that 663 area. We'll see if they can do it directly or if they're going to take kind of the long, drug out, choppy approach. DXY is moving up with vigor. Well, there you go. Dollar having a little bit of a bounce. Bitcoin's still holding that 110 area. 110, 112. They've been playing with it for a while, though. They really need to explode out of there, or they're going to have issues on Bitcoin and be at 100 pretty quick. Gold slightly positive today. I thought that bar yesterday might give us some follow through, so we'll see how this plays out during the day, but it's basically flat right now. ADD is climbing strongly. It's up over 500 on the first 15-minute bar. So we'll see if that maintains or sustains. If it does, I would not expect a full-on breakdown here. You're going to want to see RTY kind of melt down a little bit. And then I think there's a couple, you want to see Tesla give some back, and Nvidia and Meta are, okay. They're not certainly not like mega positive, but you'd like to see them turn red, or at least weaken a little bit if you're wanting the market to go down anyway. Ugh. slow start to the day. In the sense, I mean, it's the market's moving. It's a slow start in the sense of trading. We don't have a whole lot going on, and market kind of grinding lower slowly toward gap close, gap fill, and the pre-market low. I would expect those to get hit on the ES. They already have, I believe. Maybe not the pre-market low. Let me look at the NQ. I don't think they've hit the pre-market low over here. So plenty of room to the downside still. Not quite. So they still have some room to the downside on both charts to come down, hit the pre-market low, fulfill that failed breakout, and go from there. But again, you do have that's fading a little bit. The ADD is fading a little bit now. That's a good sign for the bears. Remember, while we wait, I can answer questions or anything else you guys have concerns about or want to know about. Whether it's stocks or others, I am a open book. I do believe we have a 7 a.m. announcement of housing sales, maybe. Let's look real quick. I think it's housing starts or something, or home sales. Well, let's see. Today's Wednesday. We have new home sales, and then a Fed speaker at 4, and then tomorrow you have a bunch. You got the Fed president, jobless claims, GDP, U.S. trade balance, retail inventories, wholesale inventories, blah 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 blah. Fed speaker, home sales. All of this is before the market opens. Except home sales gets us into in Fed Bowman speech, and Michael Barr. Yeah, so a lot tomorrow. Tomorrow could be a pretty volatile day. Oh man, sorry guys. Will, welcome to the stream. Does the IWM divergence make it hard to trade the indicator? No, not at all. It's the IWM is more for bigger. Well, the IWM is more for perspective for me. So what do? I look at our supporting evidence all the time. So if the market's green like it is right now, I say, okay, well, what's the RTY? Is it green? Barely, yes. So it was actually just red. Okay, what are the banks? Are they green? Yes. Is the transports green? Yes. Is the Mag 7 green? Mixed. Today you're mixed. You got Netflix is struggling, SMH is struggling, Apple and Google are struggling, and the rest of them are doing okay. So I look at the supporting evidence just to say, are we generally bullish today? Are we generally bearish? What's the ADD look like? Those types of things are important to know alongside your trade, so that when we get a buy signal down here, if we get one, wherever we get it from, we can look at the supporting evidence and say it's a pretty green day. I mean, it's not pretty green in the sense that we're way up, but everything is basically flat to green. So it's certainly not an overwhelming selling day yet. Now, of course, that can morph really quickly. But as of right now, everything is still in the green. So if I get a buy signal, I feel okay about that. The ADD is advancing still. Fold is still positive. So if I do get a buy signal on a day like today, I'm like, that seems pretty reasonable. Now, if they break the pre-market low, that's a different story. But yeah, that's the RTY's divergence isn't necessarily an issue. Could you give some pointers on shorting meme stocks? Well, I can't give pointers that would be specific to meme stocks. I can just give you pointers on shorting things. Number one, you need to wait for a level of support to break. And you can short immediately once it's broken. So if, let's say, we're waiting for 663 to break today, and they come down and do this. Well, I can now short here with my stop just above whatever this is, because when this breaks, you should see, if they're going to continue, you should see them back test it. Okay. Potentially back. They don't have to back test it, but potentially you can see them just accelerate and get away from it. But in both of those cases, they broke support. You would, if they're going to continue, they're going to stay basically under this. They may spike it a little bit, so you want to move your stop up above it a little bit. But in a overall, if they're going to be aggressively short or in a day, then they're going to break support and then stay below that support. Not always. You're going to have times that they break support and then go back up and then come back and break support again, and then you might have to try to enter the trade again. Not everything works perfectly every time, but that would be the biggest thing on any stock is they got to break support, or you have to have some other kind of factor. For us, the weekly indicator very often tells us when it thinks weakness is in the market, based on a whole bunch of factors. But just from a general trading standpoint, that's one that, okay, they just hit the pre-market low here, guys. Let's see if we get a reaction. I would expect at least a little bounce, even if they spike through it. So they can spike through here and then push up, but I would expect a little bit of a bounce here back to test the 8 at a minimum up here at 663.64. Now, if they plow through this without bouncing at all, that's another feather in the bear's cap for today. Now screens are starting to turn red, so we got to be a little careful here. NVIDIA has now turned red. The ADD is falling a little bit. I particularly stay away from meme stocks, by the way. They're very, very volatile, and anytime you're wrong, you're going to get smoked. And I'm not trying to get rich quick, because if you get rich quick, you'll get poor quicker. So for me, I stay away from things that are a little more irrational, unless I have a strong grasp of how they work. Like Bitcoin it's not a meme stock, but it's meme-ish in how it moves. But I feel like I have a pretty good handle on how Bitcoin works. It respects support and resistance a lot more now that it's a more mainstream traded vehicle. When it was the wild, wild west in Bitcoin, there was a lot of insane moves. Stocks that have had a huge run, just stay out of their way until they break support. Now, when they break support, like Google's one. Google is one that has been on a tear to the upside. By the way, we've broken the pre-market low solidly. Very good for the bears today. If they come back and test and make a new low, will be trend day, and unfortunately, that'll be it for today. Again, this week has been slow for trading, that's for sure. But like Google right now had a huge run up. We will take the first buying opportunity down here if they give us one. But if they don't give us one and they backtest and go lower, then we'll just call it. Sorry, Google's made a monster run lately. Let's go to Google. Now they're starting to give some up. Got to be quick here just in case anything happens. So on Google, you need to see them break down. Now they're breaking the 8 here. That's a pretty good support to break, because what is that? That's the momentum. And they are, as soon as everything loads up here, I'll tell you. They're coming into this support here. So this 244 to 240 area is going to be good support for Google. If they break down below that, I would expect them to come down to 211, and that's when I would start shorting them. You know, but that's me. If I was going to try to do something off of this, I would want to see. So I would look for them to come down into this gap fill, give you a little bounce, and then if they break below this low, that's when I'd look to short. But that's, I mean, those kind of stocks, if you bring Google in here, you can see that Google went straight up for from 142 to 280, 249, so over 100 points in just a few months. It's pretty crazy when you're only a $140 stock. Okay, we got to get back over because I think we could get a buy signal here in a minute. We have the gap fill. They broke below the pre-market low. That's a warning sign to the bulls. They did come down to the open of the week and hold. Not quite to the open, but close. If they can break this low, I would call that would be a call for it. So they're at 6,700. This is the game of the day right here. If they break 6,700, they're going to accelerate to the downside. If they do not break 6,700 on the ES, they then look for a pretty solid bounce. This has been support. They've held it many times. You can see it. They held it right here. They held it right here. If you go back to the other day, I believe they held it or came right off of it that day. Yeah. So they came right through it here after holding it and breaking out. So 6,700 is the level. Getting through that should produce more acceleration to the downside. Excuse me. So what I'm trying to say, I guess, is this is a reasonable place to see a bounce. Right now, I do have 663 as my buy strike. If we do get a buy signal, we'll have to see how they react here. This is going to be the key time of the day. So right now, we're going to find out if the low of the day is in, and they're going to try to hold here and spike it higher, and then either take it on out or chop the rest of the day, or if they're going to break down. If they break down 6,700, that's a warning sign. Do you trade in the first 10 minutes? Option prices awfully seem really screwy on the open. I do. You don't want to take any kind of market order. Um, you don't want to take any kind of market order on the first candle of the day because you're right. Options prices are really screwy. So you need a limit order always. I don't use market orders ever unless, it's an absolute, oh my God moment. Um, like it's the end of trading places or something where the Mortimer's trying to sell and he can't get in there and he's just doing anything he can to sell. But anyway, but the first 10 minutes of the day are often very good moves. Very often we get a sell here, and obviously we didn't today because it never completed a buy cycle. But those are great trades. If you got a sell here, I mean, it moved down from 664 to 662 in a few bars, and it would have been great. But yeah, you just can't take market orders. If you use a limit order, you'll be fine. And never sell the first candle of the day at a market order because all the market order doing is saying what order's in there, match them up with him. So if somebody's stink bidding right there and they're putting in 60 cents for a $1 thing because they want it to come down to that price to buy, and at that moment you put in any market order that's out there, I'll take because that's what you're saying, and that's what they have, then that's what you get matched up with. And while you could have got $1 if you were patient, the next order up was a 60 center, and instead of saying rejection, they say, oh, it's paired to a market order, moving on. So never use market orders is the overall theme, especially on the first candle of the day. Have you found the holidays difficult to trade? Yes, that has been a thorn in our side, and the reason is volume is much lower during especially November and December. So those have been harder months for us for sure. Were you trading back in 2008 and 2000? How'd it go? I got creamed. So yes, I was. I'm trying to think here. In 1999, I wiped out a 15K account in about a month because I thought I was super smart. And maybe it was 2000 something. Right around there. I think it was 1999. I joined the Navy in 2001, so maybe it was 2000. I don't know. Anyway, did that. Got some Navy money, wiped out another account early in the 2000s, and then said, I need to understand how the market works because this is not working for me. And, I stopped day trading at that time and started swing trading with Elliott Wave. I started swing trading, and then I learned Elliott Wave, and then I started applying swing trading to Elliott Wave, and that's when my results really changed from ordinary to okay investor to very good investor. And then as I've gotten older and smarter and wiser, I've done a lot better. But I've wiped out a couple accounts. Anybody that got into trading and knew how to do it right away, well, good for them. But most people have at least one or two oh my God moments in the stock market. Like, oh my God, I'm an idiot. Doji candle forming on the GC time on the daily. Doji candle forming on GC on the daily time frame. Maybe. I mean, that's awfully early to say that. They're in a battle, but you have a long time before we close out near a doji. So we'll see how it goes. But I do think that gold's a little bit of a gap in crap yesterday. Was worrisome for me, and being up 160% on the money in there, I was okay with taking some off. Okay, so Sonny, I believe it was, talked to me about shorting, right? So here's what you got right now, Sonny. If you are a guy that wants to short, they broke the pre-market low. That's support for now, right? 6,700 is big support. So if you want to wait for that, I understand. But they broke the pre-market low, and now they have back tested the pre-market low and are pushing down. So if you want to short here with your stop kind of right here or a little higher than that, maybe up here around the 8 or something. Give yourself a little backstop. If you want to short here looking for them to break down, that's certainly acceptable, knowing that you may want to take your first profit at 6,700 and then see if they break that, because then you could see acceleration to the downside. And that's not just Sunny, that's anybody who's interested in that kind of setup. What you have is you have a break of support, which is the pre-market low. And I said I expected them to bounce that area, and they didn't. And the reason I expected it is they spiked it here and bounced it out the last candle of the day. The next candle in the close, they came exactly down to that place and spiked it and never looked back. Then they came back in the pre-market, tagged it right here, and came all the way back up. So I expected them to bounce this a little bit. They did back test it here. So they came back to that level after breaking it. And now they're pushing down. Like I said, if you wanted to try that, you could. That's not my style. And as of right now, they're holding. So those are the types of setups you're looking for, though. Break support, back test support, and then come back down and start to break. Now you can wait till they break this low. That would probably be a little more cautious and give you a little worse entry price, but a little more likelihood of follow through. That's up to you when you do those types of trades. People have different ideas of those trades. All right, we have a buy signal here. So we are going to get a long at 125 at 663. And our stop is going to be 662.90. And we'll see if they can get through the 8. So this is the make or break part of the day right here. If they hold the 8 and they push back down, trend day, game over. If they get through the 8 and through the VWAP, we'll see if they hold 21. But if they get through all that, they're headed back to the pre-market high and potentially squeezing. So this is the play of the day here for us. If it's what's the word I'm looking for? It is break out or break down. And it's looking like they're going to back test the 8 and break down. All right, we got stopped there at 102. This is looking very trend day like. If they make a new low here, that is going to be it for us. We'll be in a trend day down scenario or parameters. And remember, guys, trend day down doesn't mean that they're just going to do this. It means that they're very likely to sell all the bounces and keep price down here and grinding down lower. They can do that. They can fall through. And if they break 6,700, I would expect acceleration. Just keep in mind that 6,700 is pretty big support. So if you are trying to short here, take some profit at 6,700. ADD is falling now. It is back down to 216. Certainly not falling off a cliff. But the ES and NQ are red. RTY is slightly green. So it's kind of a choppy day. I don't know that I expect a big breakdown unless, I mean, if they get through 6,700, that's going to be a big level for the bears. And I do think that will accelerate another 20 or so points down pretty quick, 6,680. And then we'll see what happens there. Closing back below the pre-market low and the body of this candle will be good for the bears. If they do so, they're going to close. Yeah, they did barely below the pre-market low. So that should give the bears a little bit of momentum to push a little more here. You know, Nvidia's turned red. Meta is backpedaling. They were up 0.5%. Now they're up only 0.1%. So we are seeing some weakness in the Mag 7, which I'm certain will translate into the market if they continue to stay weak. Remember, it's always Mag 7 versus the market. If the Mag 7 is red and the market's the breadth is green, or the broad market is green, you're gonna have a hard time having a green overall breakout type of day. You might have a green day, but maybe not, you know, like a 1% up or anything crazy like that, or decent like that day. And if the Mag 7 is green and breadth is red, you're gonna have a hard time having a breakdown day. So when you get kind of this mixed bag, it just depends on how green the breadth is, because just because you're slightly green doesn't mean you can outweigh the Mag 7. In fact, if I had to look, I would guess RSP is green. Yeah, RSP equal weight is green. So the Mag 7 is keeping us down right now. Ever trade UNG? No. No, I never got into oil and gas and all that stuff. Is it possible to get a love bite from a tiger? What is wrong with these people? Leave the tigers alone. I got to be honest, Will, I have no idea what you're talking about. All right, bears need to break this low right here, 662.81, the candle that just broke down. They want to accelerate that low, and ultimately they need to break through this little ledge here at 662.71 to 70 or 65. This little where they close this candle, open this candle, and spike this candle. That will get them back down to the lows, and that would be good enough for a likely breakthrough and continuation. So that pre-market low area we talked about, I said they should bounce here. They pulled the old spike in reverse and then spike in reverse kind of deal. So they are bouncing it, just took them a while. We'll take one more shot at this buy because they have a higher low here. So 113 at 663 is the trade. And our stop is 662.70. Back at a key area, the 8 and VWAP. This will be the kind of tell of the day. The reason we did take that second buy, just so everybody knows, we did spike the pre-market low, back tested, but we haven't made a new low yet, so it's not a full trend day yet. And in that time, we have made a low, high, higher low, and now we're trying to see if they can make a higher high here again on a bounce. If they can't and they push down, then so be it. We get trend day and we're done. But right now, we are looking for this bounce and push. This will be the key area right here. You got VWAP and then these two candle spikes into VWAP. So if they get through that, they're very likely to come up here next, 663.70, and that is last week's close as well. It lines up with the 21. So those are the two areas the bulls have to defeat in order to start momentum higher and challenge the pre-market high again. Got a spike and rejection of VWAP. Bulls will need to step up and not let this turn ugly to the downside because that could be a back test of VWAP and then a sinker after that. So bulls need to step up and get this closed up above the 8, and they have not closed anything above the 8 yet, and then up as close to VWAP as possible. That would be a strong indication the bulls are going to try to do okay here. But a close back below the 8 would be pretty weak. So we talked about momentum on the big charts. You can see here now to the downside, or at least the bullish momentum. This is bearish momentum. You can see the red 8 is below the 21, indicating that momentum is to the downside as long as price is below the 8. As long as price is below the 21, overall structure is to the downside. Above the 21, and we'll see. But generally above the 21, we're going to go challenge the pre-market highs. Bull's trying to be resilient here. Pressing back up on VWAP. All right, not bad. I guess still got to get above VWAP, but that's a close above the 8. Hmm. Essentially, this is the fight for the low of the day. If the bulls win, the low of the day is in, and 662.41 is very likely going to be the low of the day. If the bears win, then we're going to come down and break this low and accelerate into 6,700 and see what happens there. It was in the news a tiger trainer got killed. Oh, must have been Siegfried or Roy. They called it a love bite. Yeah, I'm sure. DXY staying strong, huh, George? Tesla still going higher, short covering. Yeah, I mean, we've been talking about Tesla for a while. I don't know if you watched the video yesterday. Tesla's in a big megaphone pattern. I don't know if I had Tesla on yesterday's video or not. But anyway, Tesla's in a big megaphone pattern right now. We're looking for a top ish, not like an overall top, but like a temporary pullback to kind of reset because it's been so strong to the upside, and then reset for an even stronger move to the top of the megaphone. Nice response from the bulls here, if they can get out over VWAP. Otherwise, it's just another dead cat candle that we've seen here. But the battle for 663 is on. So currently they're consolidating. You could call it a flag, small bear flag, if you want. But as long as they're consolidating below VWAP, the bears are still in control of the short term, like of today. If they get above VWAP, we'll see what happens at the 21, but that would be a strong indication the bulls are going to squeeze. So VWAP's going to kind of be the determining factor here. A close above VWAP would be bad for the bears because they're likely to start getting squeezed at that point. You can see they've tested VWAP 1, 2, 3, 4 times now, kind of 5. This one kind of got close and failed each one of them. So until the bears or bulls can close above that, that's where all the sellers are sitting. Is they're just reloading their positions at VWAP. Slow moving here. Still seeing the ADD start to fall, um, or continue to fall. It's still positive, positive about 200 right now. Gotta love a rising wedge. Yeah. I mean, technically it's a wedge, but it could be a rising triangle as well. That didn't. That last candle didn't fit it exactly, but the difference, a rising triangle would be a little more bullish, a rising wedge would be more bearish. So I think if you're technical, yeah, we can make it a rising wedge. I'm going to move my stop up to 662.93. So 90, I'm going to say 662.90. If they get back below this candle here, they are very likely to continue. That would put them below. So essentially this line right here, where the pre-market low line is where they've been kind of spiking in and out of. Getting below this low here would be a bad sign for the bears. So if they do get back below that, that's where my stop's going to be. So let me update that. 662.90. Once again, a rejection of VWAP. So nowhere, going nowhere right now, just chopping sideways. You can obviously see that both parties think this area is important. The Bears want to break that 6,700 level. The Bulls are desperately trying to defend it. But again, until the Bulls can get back above VWAP, this is the Bears in control. Okay, there's our stop, guys. So 101 on that. Oh, sorry, 99. It just updated, flashed on me. Sorry, stop 99 on that. And I am likely to call that a day. You got two strikes and you're out there, and then also the breakdown here again, I think will likely accelerate. We'll wait here a couple candles and make sure that they go ahead and blow down and make it a trend day, but the Bulls have been unable to show any kind of strength. They have had 1, 2, 3, 4, 5 full opportunities to break VWAP and failed each one of them. So now that the bears have come down and broken critical lows here, I do think that they will follow through, and we will see at least a dip down into the 6,700 region on ES, and then see what happens there. Again, a bounce there would not be shocking. I would say it's going to bounce off that 662 level down here. They're likely to maybe bounce the low, so they can definitely come down and kind of do this, and then we'll see what happens down here. This should be about where this should be about where 6,600 or 6,700 on ES is, and that's a high volume level. So that's where I'd be looking for them to kind of fail the overall support. I'm not gonna lie, I'll be super annoyed if the Bulls do run it here. Um, that's a nice little trap they ran. If they come down and close, not only got below this low, closed below this low, which was a um, should have been a win for the Bears, and the Bulls are trying to run it back out of here. Still seeing the ADD drop, but Bulls are now trying to push through or up into VWAP. So if this does push through, that's super annoying. But those things happen. That is, you have to make a call sometimes. We have seen lots of trades go sideways for 8 or 10 bars, and then you have to have such a big move to win because the time decay has been so bad. So once we start getting into trading sideways for a little bit, if we start to see weakness, we don't want to eat that extra 20 cents over time, because that's going to really impact our loss and take it from a smaller loss to a loss that we really don't want to take. So we made a call there when they closed below that candle low, that the Bulls were unlikely to break through, and they still haven't broken through. They just kind of ran a bar up there. They're kind of making this annoying sideways VWAP down to pre-market low chop here is all they're really doing. So if they do take it higher, that's annoying. That stinks. But again, things happen. Trading doesn't always go the way you want it to. It seems that lately Wednesdays have been terrible trading days in general. Whether it be the market's just choppy and slow, or it's a trend day, or whatever, we have not had much luck on Wednesdays with decent market action. They have not made this easy, whether you were long or short. The only, unless you got right in at the open, since then it's been pretty hard to be long or short. The move down broke the low, the bounce failed, bounce failed, bounce failed. So either you were long or short here, you got chopped up. So not a great overall day for trading because you didn't get the kind of reaction you want off of the lows. And that's kind of what you're looking for. You're looking for a key level like a pre-market low, a high volume level, a call wall, put wall, something like that. Then you're looking for the reaction you're supposed to get off of it. And then you just take that edge and apply it. And sometimes those edges play out. Actually, way more often than not, those edges play out. And then sometimes they don't. Sometimes was today. With that, guys, I think I'm going to go ahead and call it. Tomorrow has a ton of events, and I think that it may be a little more volatile than today. We do have trend day parameters not fully in place, but you did break the pre-market low, and all the back tests so far have held the 21 and VWAP. And remember, they always want to go back to the 21, and they can do that two different ways. They can obviously just go back and touch it, or if they don't want to do that, they can come down and then consolidate until the 21 comes down to price, and then they can move away from it again. And it looks like it's the latter, where they're consolidating, the 21 comes down to price, and then they're going to see if they can move away. But we do have trend day parameters, so I don't want to continue to try to trade against that. Obviously, they still need to make a low to completely fulfill the trend day. But overall, this is not looking like we're going to see very good tradable longs today. Need to move my stream to Friday? Probably. Fridays are usually pretty good. Thursday and Friday have been important events. Unemployment, PCE, based on the technicals. What direction do you expect the market to move? Down. And, I don't want to say that like I said it very confidently because I do think that there's a lot of reasons for the market to move down as a setup and everything else. There's some very large dark pool transactions coming in at the all-time highs, which usually mean that the guys are taking profit and the market's getting ready to turn. You are in the worst seasonality of the year. You have an extremely overbought market with all the overbought signals across the board. I think that down is the most likely scenario. I mean, some of that will depend on how we close today. If they fail to break down here and then they rip it back up and close at all-time highs, I might have a different opinion. But if it stays like this, where they're starting to push down and they can break down maybe even below yesterday's low and create a lower low on the daily chart, that would be very good for the bears. So it kind of depends on the close, but my gut right now would tell me down. All right, guys. Well, thank you for joining the Wednesday stream. I do appreciate you guys. It was not our best day, but that's how trend days go. They suck. And I do think we will probably come down and beat this low. But again, if they get back above this level here, now it's the 21 essentially, expect them to squeeze a little bit. And, 660, 370 being the next target, and then 664.12. All right. So let's go ahead and shut it down here because there's no sense in just watching this market drip sideways slowly. It's kind of awful. I appreciate everybody. Thank you for joining the stream. We'll do it again next week. The week after next, there will be no live stream. I have a vacation that week, and we'll be out. So next week, though, business as usual. Thanks, everybody.